Nifty Metal Index, in fact, is down 3% as we speak. It is the biggest sectoral loser in trade today. Something like Hindustan Zinc is down in excess of 6.5%. We have Nalco down 5.7%, Jindal Stainless, Hindustan Copper, NMDC, Jindal Steel, Vedanta, all of them falling in excess of 4% in trade today. So that's the kind of carnage that we've seen in metal stocks today. But to decode that, the rationale and what the outlook is for the sector going forward, we're now joined by Aditya, Senior Research Analyst, Metals and Power at Axis Securities. Mr. Valekar, afternoon. Thank you so much for joining us on such a short notice. Your thoughts on what is leading to this kind of fall on the Nifty Metal Index today?
Good afternoon. So I think means we have seen the kind of rally in metals and the valuations were factoring in the bull case scenario. So any dent in the prices, any pullback or retreat in prices would have been naturally led to correction in the stock prices. So that is what has happened. So what happened is that in the commodity space, there was a rebalancing activity. So silver and gold, so all these, because of this rebalancing of the commodity index, there is a technical the correction in the underlying commodities. So based on that, there might be some volatility in the near term also. Also, fundamentally, the news macro services index has come stronger. So there is kind of a debate whether Fed will cut rates in the next in this calendar year, and how what will be the quantum of that. So market is keenly watching that, and I think most of the market has already factored in Fed rate cuts in calendar year 26. So if there is any blunt in the labor data, so basically if there is a strength in the labor data, then the Fed will not feel any urgency to do multiple rate cuts. So that is a key data point which we have to watch. And so far the trends are mixed. And if the clarity emerges further that the labor market is softening, then the Fed will have a clear headway to go for the Fed rate cuts, and that will be supportive for the precious metals and base metals. But from a fundamental perspective, the supply demand dynamics is clearly in favor of all these metals, because the supply is not increasing, whereas the demand is the use case of demand are rising. So from that perspective, I think the retreat or the falling of the commodity prices can provide an buying opportunity from lower level. Given that all the stocks were factoring in most of the positives and factoring in the bull case valuation, the stocks have corrected.
Okay, so that's about some of these counters, but just wanted to understand, Aditya, that let's also talk about valuations. The kind of run-up that we saw in defense stocks, the similar kind of run-up we saw in metals as well, something that we saw in the previous half of 2025 as far as the defense space was concerned. Similar rally we saw in metals also. But on the valuations front, do you think a similar story is playing out there also? Because, in the latter half, certain valuation concerns were flagged for the defense space. Do you think something similar is playing out here as well?
So metals, most of the metal stocks were also trading 1.5 standard deviation over their long-term averages. So if you take case of aluminium stocks, they usually trade at 5.5 to 6x their 12-month forward EV/EBITDA. But now in Nalco, they are trading at 7 and above 7x. So the underlying increase in valuation is definitely driven by the strength in the underlying commodities, like aluminium is still the spot aluminum prices are still high at $3,000 per ton. So the valuation is justified, but in order to sustain that valuation, the aluminum prices should stay at this level for a long period of time. And I think this is more of a tactical correction, and there is some bit of profit taking which is happening. But I don't think that we will see further correction in base metals from these levels, because the supply demand fundamentals are in favor of these metals. The only risk which I see is if there is any strengthening of the labor market in the US, then the Fed will not have much urgency to cut rates, and that will be clearly a negative scenario for commodities in general and metals in particular.
You told us, Mr. Valekar, that the fall in metal stocks is a buying opportunity. Any stocks stock-specific ideas that you can share, either from the ferrous space or from the non-ferrous space, and also your expectations from the upcoming earnings season. What are you penciling in, especially because some companies like Tata Steel have already reported their operational data? How do you view it?
So I think the Q3 earnings will be slightly muted for both ferrous and non-ferrous companies. For non-ferrous companies, the earnings will remain muted because of company-specific issues. For Hindalco, there is some weakness expected at Novelis operations. For Nalco, the alumina prices have corrected and alumina sales may come down. For steel companies, the spreads will be not favorable for earnings, so we may see slightly muted EBITDA growth. So Q3 is a kind of a result season where we may see moderation in EBITDA on a quarter-on-quarter basis. So, but given the kind of commodity prices which are prevailing at this point of time, and with the in non-ferrous metals, and with the onboarding of safeguard duty on steel, the outlook is slightly better than as compared to Q2. So if we get an opportunity of lower, if the stock price is correct, basis the results, then I think that also becomes one of the opportunity for investors to accumulate. The people who have missed the rally, they can enter at lower prices.
So you could look at entering at lower prices, that's the word coming in. But Aditya, the kind of fall that we are seeing today, massive fall, right? So was this anticipated, was this factored in, or is it coming as a surprise to the market as well? And also, since you said the quarter is going to be muted, that's the word out there, do you expect a further fall in Nifty Metal, or could this be a one-off case?
So this commodity rebalancing is definitely a one-off adjustment, and however, even though it's a one-off adjustment, the volatility in prices may persist for few days, and it will take a few days for prices to settle, and then it will reflect the true picture of supply demand fundamentals. And also market will keep on checking the commentary from Fed. As I earlier said to you that any strengthening in the labor market will be a clear negative. But so far, market has anticipated that the labor market in US will be weak and Fed will have an opportunity to cut rates. So that is a consensus view. And the weakness in the stocks, in the stock prices may happen once the actual results come. So if the results don't exceed the expectations, then we may see some correction. But as I said, means the outlook for Q3 is now better for both ferrous and non-ferrous, because for non-ferrous, clearly the prices have increased and the raw material prices like coal, thermal coal and all, they have not increased that much. For steel, because of the safeguard duty, there is a support on steel prices. And with the construction activity picking up post-monsoon, we expect a slightly better quarter for Q4 for steel companies also. So any dip in Q3 post results, we can consider it as a buying opportunity.
So the dip in the metal sector is a buying opportunity. Third quarter is expected to be a soft quarter, but the outlook for the fourth quarter is now improving. One, because of improvement in the global dynamics, and also because of improving steel prices on account of safeguard duty, which has now been imposed. Mr. Valekar, thank you so much for taking your time out and joining us here on ET Now. Nifty Metal Index is clearly the biggest sectoral loser in trade today. On that note, we need to slip into a very short break. More news and updates will continue on the other side. Stay tuned.